Shut up and sit down.
And now, streaming live from the sunny Southern California coast, this is Options Uncensored.
Hey everybody, I'm Steve. Welcome to Options Uncensored. We're making real option trades in real time together. Let's get right into it. First things first, make sure you have your brokerage account open so you can follow along. Have your YouTube video quality set as high as possible. That way you can read the numbers a whole lot easier. Have a calculator on hand so we can do some easy math. If you have a question or stock you want to go over together live, leave it in the comments section below. And finally, remember, this is not financial advice. This is all for entertainment purposes only. All right, welcome everybody. Happy Friday. It's Expiration Friday. Let's take a look at our open positions. Our short call spread on Shopify filled. We'll go over that one in a second. A semi ETF trying to get to 27. We are down 21 bucks. I know the semis are on a tear right now, so just hold on tight for that one. Our emerging market ETF trying to get to 16. Right now the bid's at 16, mark is 19, so we're almost there on that one. This is only a 2-day old trade. XBI short call spread for February. We got some work to do on this one, but we've got to kind of wait till expiration or a big move down for this one. Morgan Stanley is slightly in the red today, trying to get to 34. This is just a short put, not a spread. Our SPY trade, we'll go over this one in a second as well. I'll explain that one in a second. Delta, trying to get to 16 right now. Big red day for Delta, so down 24 bucks overall. And that XHB, trying to get to 25. This one's fine, up 10 bucks. So no worries on this one. Shopify, let's review this one. Short call spread, we sold the 95 and bought the 100. Somewhere around the 10th, I think it was, the 10th or 11th, we sold on the call side for February expiration. We sold the 95, which is way up here, and bought the 100. It's moved down yesterday, and today it finally closed. So we made 27 bucks for a $500 spread. Let's do the math. 27 divided by 500, 5.5%. That's not bad. We'll take that for a week's worth of work. For our SPY trade, let's review that one because this one has been going on for a couple months. Today is kind of Judgment Day. So back, I think, in early to mid-November, we sold for December expiration the 456 and bought the 461. So $500 spread there as well. During the course of December, the market overall rallied up hard and both our strikes ended up in the money. So we rolled it from December to January expiration, okay? Just to buy some more time. It's still moved against us and just been trending in this pattern the entire year since mid-December and hasn't had the move down that we're looking for. So we tried to roll it to February and it hasn't filled yet. Right now the bid is credited 14 cents and the ask is 102. So here's what we're going to do with this one. If it gets filled today by, say, a half hour before market close, great, it'll buy us more time. If not, a half hour before market close, I will cancel this order and let this spread expire completely in the money. So what'll happen Monday morning is we'll be assigned the negative 100 shares because of the 456 strike and assigned essentially the shares will be taken away by the 461 call that we bought. So it just cancels each other out. We'll have 0 shares left and we just take the loss of, what did we get? Probably around 420 bucks we'll be down. But the good news is by rolling this in December, the majority of the losses were taken in December of last year, not in January this year. So as far as taxes goes, the losses help offset all the gains we had from last year. As you can see, this spread is only down, quote unquote, $32 for the year for January. So essentially we're just taking a $32 loss for this year, okay? I hope that makes sense. If you need to rewatch the videos to see how this spread started, how it went against us, how we rolled it, and how we're going to take the loss today, okay? Losses happen. It's no big deal. just we have so many wins over the course of the year that they outweigh some of the few losses that happen sporadically. Maybe 5 to 10 times a year we'll have losses. Not that bad though. Okay. I think last year was a very weird year. Our first loss was at Boeing in December, so we went the entire year without a loss until December. So that's very unusual. I guess very lucky. Okay. Probability wise, it shouldn't happen that way. Having a loss 5 to 10 times a year is way more likely. Okay. All right. Let's see new opportunities for today. We'll start off with Schlumberger SLB. Post earnings move, I believe. The 19th. So earnings were this morning. Gap up and it sold off a little bit. Beautiful chart, has a great upward momentum. Wouldn't mind selling the put side. Volatility wise, not that high, so that's something to keep in mind. Just take a look for fun. On the put side for March, you'd have to sell the 42.5. And if you want to do the spread, buy the 40. I don't think you'd need to. I wouldn't do that. Not terribly liquid. The spread is 36.52 with some volume today. Call side. Definitely more liquid on the call side. 55. If you sold 55 and bought 60 on the call side, what do you get? 54 minus 12. Divided by 2, divided by 500. Only 4.2% if you sold the call side. So skip the call side. You'd want to sell the put side here at the 42.5 or the 45, but it's just too illiquid. Dividend is 2%. 42.5 on the chart. Where's that? 42.5 is right about here. And remember, this is March expiration, so we've got a good month and a half till March expiration. Okay, so keep that in mind. Could it get down here? Absolutely. I'll keep a mark on this one and come back later, okay? Let's do Wayfair next. Up 12% today. Earnings are the 22nd of February, so we got some time, a little bit more than a month. The news for Wayfair is they announced some layoffs, and that helped. You got a question. I've watched you sell puts and put spreads and call spreads. Do you ever sell calls without the spread? Thanks. Oliver, no. So only sell, and this is just me personally, for risk management's sake, if you sell a put or put spread, so for a put spread, the most you're risking is the spread. So if you sold, let's say for example on Wayfair, if you sold the 50 and you bought the 45, the most amount you could lose is $500 because that's the spread minus the credit you receive. Okay, so say you received a credit of just like theoretically $50. The most you could lose is $450 overall. If you just sold the 50 without making it a spread and you had it cash secured, the most you could lose technically is $5,000. That's if Wayfair went out of business and went bankrupt within the time you had expiration. You'd have to be assigned the contract and you take the loss. On the call side though, I only sell spreads just because your risk to the upside, if you sell it naked, is unlimited. So say Wayfair had a buyout deal and they went up to $200 a share. That call is way underwater and the losses would be extreme at that point. And actually, if you have a small account, you could be wiped out and actually owe your brokerage account money if you don't have the money to cover it. So I talked about it maybe a week or so ago. If you have some time, go onto YouTube and look up optionsellers.com and see what they did wrong. What they did is they shorted calls on natural gas. And what happened was natural gas is very volatile. So if they sold calls when it was low volatility and nat gas shot up, their naked calls went against them so much that the entire fund went under, and they weren't able to roll those calls. So the entire fund went under. Everybody lost their money. So check it out. Do your own research. Me personally, I do not sell calls without the spreads, and I don't recommend it, especially if you have a small account, okay? You can get into a lot of trouble if you don't know what you're doing. So check it out. It's called optionsellers.com. I think they went bust in like 2014 or 15. I can't remember. It was a while ago, okay? So just be aware. Good question, Oliver Stone. Nice name. Back to Wayfair. So Wayfair has cutting 13% of its workforce to reduce costs. Earnings on the 22nd. Okay liquidity here if you want to sell the call side. These are expensive. If you sold the 75 and bought the 80. 75's up here for March expiration. Good ascending trend line. Caught a bid here down at 50-ish. This one's not bad. Would like it to move a little bit higher. 75. Look at volatility really quick. It shows very low volatility here. IV rank of 31. This is interesting too. Mark this one, come back. Next up, Macy's. I think Macy's did the same thing yesterday. They announced some layoffs. So they were Macy's to lay off also 13% of its corporate staff and close 5 stores. And they are down because of that. Earnings are in March. We got plenty of time there. Traded Macy's way back in, I think, October or something. That's right. If you're with us in August, we sold the put on this day after earnings and moved against us. We had to keep rolling all the way until November, I think. We made our money back. So rolling gives you more time and you can make your money back. This time, though, I don't know if I want to play that game. Earnings are the 7th, so we got plenty of time. Could catch support here at 17.5. If not, next support comes around 16.5. And after that, all the way down to 15 with the 200-day and some support right here. So if you can move past 15, maybe. Yeah, 13. If you sold the 13. The 13 strike is liquid. So is the 12. The 11, not so much. Neither is the 10. And once you move past the 10, there's no liquidity at all. So maybe you sold 14 and bought 12. What do you get there? 58 minus 31. 58 minus 31 divided by 2 divided by 200. That's 6.7%. Where's 14 on the chart? 14's right about here. Could it get there by March? Sure. I'm not crazy about this one. Let's move on. SMCI. Up 28%. All right, earnings are on the 30th, so that's about a week and a half away. So we're going to hold on this one until after earnings. For those of you that are new, I try not to open positions before earnings. Try to wait till the move is made, and if there's a bigger move that's moved more so than priced into the options market, then I open something. But before options, it has to be a special scenario like we did with JP Morgan last week, okay? Up 27%, that's a lot. On the call side, and you'd have to go all the way out. And these are expensive too. You'd have to sell 510 and buy 520. That's $1,000 spread. And these are very illiquid. Put side. Skip the put side. Okay, moving on. iRobot, IRBT. Down 30% today. Can't remember what the news was. EU veto of Amazon takeover. That's why. All right. So earnings are on the 13th. We're less than a month away. I think it's at an all-time low maybe. Let's switch to the weekly chart here. All right, so support. We're approaching support from back in 2012. All right. If not, support's around 13.5. Okay. $13.5. Bill, we'll get to you in a second. Hold on. Just want to finish iRobot. Let's go back to the daily. Remember 13.5, okay? So, okay. In order to do this one, you need to move out to the 5, and it's too illiquid. No volume here. The bid-ask spread is too much. All right. If a put spread was headed for expiration between the strikes, I'd assume you'd always want to manage it before expiration. Is this correct? It depends. It's very gray. Every day changes the scenario. So if a put spread was headed for expiration between the strikes, I'd assume you'd always want to manage. It depends how far out from expiration you are. Give me a date, like 6 days out, the same day, 2 weeks out. If it was close to expiration, as in expiration was this week, I would try to roll it if it was in between the strikes. On the day of expiration, if it was in between the strikes and you couldn't roll it, close the trade at the end of the day, because some funny stuff can happen after hours. It's random, but it doesn't happen often, but some funny stuff can happen where you can get assigned the shares on Monday. Just, you're better off if it's in between strikes and you can't roll it, close it. If it's past your strikes completely, just let it expire completely in the money and get to keep the credit. Okay? Because if it's in between the spread, you'll get assigned the shares. And for puts, I don't want it to be assigned shares just because it eats up a lot of capital. Okay? So close it. Good question. iRobot we're going to skip just because the strikes are too illiquid. Next, TXN. Up 3.5% today. Earnings are on the 23rd, so we're 4 days out. Next week, we'll wait till after earnings. That was a fast one. Next, Ford. Ford is cutting some of their EV. Ford cuts F-150 EV production again to shift resources. There's just not enough demand in Ford for the EV, so they're going to start cutting some of these SKUs. Earnings are on the 6th. Too close here to earnings. Next, in the news, we got Hertz, HTC. They were upgraded yesterday, and today's the 18th. No, today's the 19th. Morgan Stanley upgraded Hertz yesterday. I don't know who, but someone downgraded Hertz today, which makes more sense to me. So some volatility here in Hertz. IV rank of 101, day or two. So yeah, if your put spread was, the short strike was in the money and the long strike was out of the money, try to roll if you can. If you can't roll, close the strike before expiration, because your short leg will be assigned the shares come Monday morning, and you have to have the capital to do that. And you have to have the capital to do that. And by owning those shares now, it takes away a lot of buying power. I mean, if you like the stock and you want to own the stock and start selling calls against the 100 shares that you now own, you can do that. But I mean, If I was assigned Delta on the short put, I would close out the trade. I don't want to hold shares of Delta. Morgan Stanley is a different story. If I was assigned 100 shares of Morgan Stanley, I'd keep some. Again, it's very gray. All of this is very gray. There's no black and white answers all the time. That's why trading can be so difficult. Every day has a different answer. Every week has a different answer. Every stock has a different answer. And each individual, depending on who they are and what their risk tolerance is and what kind of sectors they like and what stocks they do and don't like, everything is different based on everybody and who they are. So if you like Morgan Stanley, you want to keep the shares. If you hate Morgan Stanley and this was just a trade, you want to get rid of those shares as fast as possible, or just close the trade before being assigned the shares. Okay? Again, it just depends. I hope that helps. Okay? Moving on. Oh, Hertz. I think so. Yesterday we talked about selling the call side. You can't sell the call side here. You'd have to sell the 12.5 and you don't get paid for it. If you sold the put side, not worth it anymore. Skip Hertz. AMD is next. We've been following AMD for a week or so. Up at all-time highs again today. Earnings are on the 30th. So I think since it's moved up so much, it looks like it could be leveling out here at its all-time high. Wait till after earnings. If there's a big gap up after earnings, we'll sell a call spread. But for right now, we'll hold on tight. Overall, I've got this short call spread on the entire sector, SMH. So it's a safer way to play this because the ETF is a lot more smoothed out. So if you want to do that, I sold yesterday, sold the 200, which is way up here, and bought the 205, so it's a $500 spread for March. Today, let's take a look. I think volatility's cooled off a bit though. Let's take a look. Actually, no, volatility's still up, so this one's still a good one to make. Here's my spread. We sold the 200 and bought the 205 today. I'd still make the same trade. If I had to open this trade today, I would sell the 200 and buy the 205. You'd actually get paid a little bit more, I think. We jumped the gun maybe. 192 minus 116 divided by 2 divided by 500, 7.6%. That's pretty good. I'm trying to get 27 cents. Man, I should have made this trade today. Oh well, that's fine. Moving on. Let's check out CVS. CVS was on the list to follow up this week. Approaching the 200-day. It's getting this bounce from support here back in October at 73. Next stop is 71.5-ish. The 200-day, that's what I'm waiting for. Earnings are on the 7th, less than a month away. We're at the point where we got, in the next 2 weeks, a lot of companies reporting their earnings, so we'll have a lot more trade opportunities over the next 2 weeks post-earnings, okay? So it's difficult to open things now, but there are some opportunities out there. Just gotta find them. Okay, next, DraftKings DKNG. Looking for, 42 to sell the call side. Earnings are on the 15th. We've got about a month away. I wanted 42, right? 42 is up here. It's not there yet. We'll have to keep following up on this one. Hold on this one. Unity. Waiting for Unity to get down to, what was it? Could be catching the bounce here. There is support from back in early December and the 200-day at 33-ish. It's there right now. It's actually 33 on the nose. If not, next stop down is 30. Let's look at put spreads on Unity. Son of a gun. You have to go all the way out here. If you sold 27 and bought 25, that's 99 minus 60. Divided by 2, divided by 200. It's 9.7% return. Oof. The 27 is a little close. Earnings are the 26th. Last question. Since the spread is risk defined, would you limit your trades to what your account can support in case of assignment, or is a dealing with a margin call not as scary as it sounds? When you open these trades, you want to be careful of how much capital is deployed per trade. I've got a very large account, so I don't really have to worry about that because I'm only doing one contract at a time. But you want to aim anywhere between 2 to 5% of your overall portfolio. So say you have a $10,000 account. $10,000 divided by 0.05, or sorry, times 0.05. That's $500. So if you have a $10,000 account, don't make your spreads more than 5%, which is $500. Okay, so I'm trading this as if it was a $10,000 account, even though I have more capital available. So say you have a $1,000 account. If you do a $500 spread and it moves against you, half your account is gone. So you can stick to do like a $100 or $200 spread and slowly build that. Just know if your spread moves past the $200, you lose $200 of your $1,000 account. So what's nice about these strategies of selling options is you can have an $1,000 account and still do some trades. You just have to be very, very, very careful and not make them too big. If you have a $1,000 account and you buy options, you're going to get wiped out and lose all your money. So as retail traders, the only shot you really have in the market, aside from, is really selling premium and options and being very careful about risk management. You can't day trade, you can't buy options, you can't trade futures. You'll just get wiped out by all the big guys at Goldman and Morgan Stanley and all the trading funds that'll take all your money. So as a retail trader, this is the best strategy you have. And again, trading small and very close risk management. Okay, so dealing with the margin call, you should have a margin account, but never use it. Okay, I hope that makes sense. I never trade on margin. It's expensive too. Okay, so don't worry about margin calls. Have a margin account to do these trades, but don't use your margin. I hope that makes sense as well. Unity, put side. Unity is not something I'd want to own, so I would sell the 26 and buy the 25, or sell the 27, buy the 25. If you sold 26 and bought 25, what do you get? You're risking $100. This is a nothing trade. 78 minus 60 divided by 2 divided by 100. That's 9% there. But you're only making $9. This one's tough. I wish there were some strikes between 20 and 25 that would make this trade a lot easier to do. Because you would sell the 25 and buy like 23 or something, but just can't do it right now. Okay. Next, let's go to our IV rank scanner and we'll sort by volume. SPY, no longer on the list. Tesla has earnings. AMD, we already looked at. Apple, on the 1st. IWM still up there. Let's take a look. On the put side, we're waiting for 184. It's at 189 today, 190. Volatility is cooling off here, so it's back to the average. So got to keep that in mind. With this big move up here, we had some heightened volatility, but now it's kind of going sideways here and hasn't really sold off much. Volatility is coming back down, which means it's not a good time to sell options. Yeah, still waiting for 180, 184-ish, which is right about here. If he sold, nah. Skip the put side on the call side. If you sold, nah, skip the call side too. These aren't as expensive. Moving on. You got it, Bill. Meta has earnings. Spirit, they're up 22% today. So the deal with JetBlue got rejected. But they can appeal it. Set to refinance $1 billion in debt. Spirit reportedly urging JetBlue to appeal. Yeah, that makes sense. They're going to try to appeal it. I don't know how hopeful that'll be. Earnings are on the 5th for Spirit. Very expensive. Look at the... So when this blue line's up, you have high IV, okay? So this is where you want to be for selling. So that's good. And I think it's very obvious of why there's high IV. Big move down when the deal got rejected. Sell off because they're heading towards bankruptcy. I mean, there's a Hail Mary's chance the appeal will go through. I doubt it. You'd have to sell the 2.5, but there's nothing to cover. So if you've got $250 to burn just in case, sell the 2.5, get $22. But you kind of missed the move. You want to do this trade yesterday. I think we did look at this yesterday. Next. Actually, let's look at the call side on Spirit. You would have to sell the 12.5 and buy the 15. 52 minus 33. Divided by 2, divided by 250, only 4%. Stay away from the call side. Meta has earnings. Marathon Digital. This is still reaction to all the Bitcoin sell-off, the Bitcoin ETFs. PayPal on the 7th. SMCI we already looked at, up 30% today. Earnings for Amazon. Google has earnings. Coinbase. Looking at Coinbase at 114. Not there yet. Let's take a look. And again, with Coinbase, this is all reaction to the Bitcoin sell-off. And I'll be the first to admit I'm not a Bitcoin connoisseur, so I don't know much about it. But options on Bitcoin, that I can do. So a big move up. ETFs got approved by the SEC, and a big sell-off afterwards, which was to be expected. Now we're able to catch a bottom. I've got here 114. Why is that? From support back here? Yeah, support back here in July of 23. We could also look at the 50% retracement. So if you take 188 minus 70, 188 minus 70 divided by 2, 59. 188 minus 50, 118 was it? Sorry. 188 minus 70 divided by 2. That's 59. 188 minus 59. It's 129. 129 was right here. Is that right? Yeah, the 50% retracement was right here. It got a very mini bounce, but moved on. So yeah, next support is back here around the 110 to 114 range. We're not there yet, but there's good support at 86 to 88. We may wait for that one. I don't trust the support back here. It could be. Actually, we've got some support back here from back in August. So there is some support coming up here at 112 to 114, 110 to 114. We'll keep an eye on Coinbase. Is the put side liquid? Okay. Today, if you sold the 85 and bought the 80, you got a 7-cent spread here, a 9-cent spread here. That's not bad. It's not great, but it's not bad. Definitely these are expensive. Earnings for Coinbase are the 20th, so about a month away. Let's move on. Semiconductor, 3 times leveraged, no. Boeing, they've got earnings coming up. Google, Netflix on the 23rd, Disney on the 7th, Palantir on the 5th, SunPower, I don't know, too small. Ford, we already looked at. Broadcom, coming up. iRobot, we already looked at. 100% IV rank on iRobot. Rivian on the 21st, but that's not heightened. Intel on the 25th. They've got an event on the 21st, the flagship Foundry event. JD. We haven't looked at China in a while. Let's check out Baba. Where's Baba going to get some support? Somewhere around 62, 63. Getting close. Be careful with China. Make this a put spread, not a put. 63. If you sold 55. Sold 55, bought 50. Is it worth it? 54 minus 23 divided by 2 divided by 500, 3%. No, it's not. Very low volatility. Earnings are on the 22nd of February. So maybe we'll wait till after earnings. If things go poorly, sell the puts then. Qualcomm. Earnings on the 31st. Snapchat on the 6th. Pfizer on the 30th. And they got an event on May 9th. It's pretty far out, man. EEM, our emerging market ETF. We're in this one right now. Still IV rank of 41. That's the 30-day IV rank. Let's take a look. You may have missed the mark on this one or missed the move, so it may be too late if you're not in this one. Hold on. Still has some high volatility, so day did we open this? On the 17th. So on the 17th, this day we sold just the put, not the spread. It's moved up here now 2 days in a row. The 16th, what did we sell? The 35. So I sold the 35 put. This is not a spread. Just sold the 35 put for March expiration. So we've got some time. I don't know if I'd open this one right now. You missed the mark. If there's more downside, say down to 37, then I'd sell puts again, but I wouldn't sell the puts right now. And I wouldn't sell calls either, just because this move up can continue. So skip this one right now. Next page. Block on the 22nd. Got some time on that one. Traded square before. Earnings are, yes, on the 22nd after the close. Not a lot of volatility. We're going to skip this one. Wayfair, we already checked that one out. ExxonMobil on the 2nd. American next week. ARM on the 7th. That's too close. Shopify, we're already in our Shopify. No, Shopify closed today. Let's take a look. Do we want to jump back in? SHOP. No. Earnings on the 21st. Still got a month. Nah. If I had to, maybe still sell the call side, but not crazy about this one anymore. Missed the move. If you sold 95 and bought 100, it would be the same trade. Good liquidity here. 137 minus 85. 7 minus 85 divided by 2 divided by 500. 5%. Same thing. 26 actually. It's $1 less. Pass. Lucid is too small. ARC, no. DraftKings, we already looked at that one. JetBlue, earnings on the 30th. Definitely wait till after earnings on this one. FXI at 58%. That's a China ETF. Let's check it out. I've traded it before. It's not very exciting. Yeah, so it's heightened volatility here. IV rank is 62. Let me zoom out to the weekly really quick. See where there's support. At 20. Definitely have some support at 20. If not, so here, next stop would be 19.5-ish. From way back in 2005. Okay. Puts, if you sold, sell 19. This one's not worth it. It is relatively expensive, but you're gonna get $10. Where's 19 on the chart? Let's go back to the daily chart. 19 is way down here. It's at this low from back in October of 2022. So if it breaks down below this, next stop I said what was 19.5 or something. Oof. Pass on this one. Gotta wait to hit the breakdown. Tell you what, if it breaks down below, let's go back. If it breaks down below this low back in 2022, maybe we'll play FXI. We'll follow up on this one next week. If it keeps having downward momentum, we'll look at it. Next. GM on the 30th, Baidu. Let's check out Baidu, see when the earnings are. Earnings in the 21st, so we got about a month here. Volatility is slightly elevated because of this big sell-off starting back on the 12th. I think back then China announced some low growth estimates. That's why everything sold off. Or there was some kind of regulation in the tech sector as well. Catching support from back here in November of 22. Good liquidity here. If you sold 85 is a little close and 80 is too far out. So if you sold 85 and bought 75, that's $1,000 spread. 137 minus 45 divided by 2, that's 4.6%. That's okay. Nothing's really jumping out today. Macy's, we already talked about. Celsius, I saw them this morning. I can't remember what the news was. Down almost 9%. Earnings are on the 28th. Cut to neutral by B of A. You'd have to sell the 40, but there's nothing down here to buy. 28th. We got some time. Sell the 40. The 40's down here. I would wait till there's some good support around here at the 200-day. So 50. We're going to follow up with Celsius next week. CELH. If it can get down over the next day or two down to 50, let's look at the put side, okay? That one's interesting. Anything else? CCJ. Traded that one before. Uranium. Delta, we're already in our Delta position. Down 3% today. That's not good for us. DAL. Short the 35 put. 35's down here. This is a February expiration. So 35 put for February expiration. We got some time. If it moves against us, we can always roll. But they are post earnings. Oxy on the 14th. Stay away from Boyle. Cisco. Got a month till Cisco earnings. CSCO. Okay. So coming up to resistance here back in October of 23 and the 200-day moving average. If it moves past that, we've got a lot of resistance at 51.75. Maybe we'll get in and out of this one fast. Earnings to confirm are February 14th. So we're getting close. This one's interesting. Call side, March. Yikes, you'd have to sell 55, and that's awfully close. Sell 55 by 57.5. 44 minus 13 divided by 2 divided by 250. Yeah, 250. 6%. Where's 55 on the chart? 55 is up here. Just keep in mind, you've got earnings coming up on the 14th. Not crazy about this one, but I may do it. Earnings here for February expiration. Well, $28.9 6%. I think we'll do this one. The 55, I'll admit the 55 is awfully close. And earnings are coming up, so I've got to keep that in mind. Selling 55, buying 57.5. We'll go to verticals here. Let me look at the chart one more time. Okay. Verticals, 2.5. 55, 57.5. I'm going to sell one March 55 call and buy one March 57.5 call. This is a $250 spread minus the premium of 34. We'll go for the ask of 34. Limit credit. Receive a credit of $34. Preview this. Double check your ticket here. Sell one March 55 call to open. Buy one 57 call to open. Receive a credit of $34. Everything looks good. We'll send that one out. So if this gets filled today, 34 divided by 2, we'll set a buy to close, good till canceled, limit debit of $17, okay? Cool. All right, I think that'll do it for today. Welcome to all of our new subscribers. I think we got a couple new subscribers over the last 24 hours. So welcome to everybody to the channel. Hope you enjoyed everything. Good job this week. We had a lot of positions filled, made some money. Spy trade. Sometimes you got to take some losses. That's okay. Any channel that doesn't have losses is fake, okay? So if you watch people post YouTube videos and they only have wins and they make crazy returns, it's all fake, okay? You're going to have losses. Everybody has losses. Be highly suspicious of people that never lose, okay? So the spy trade, at the end of this day, you can either cancel the order yourself or just this will all expire in the money and you'll be zeroed out Monday morning, okay? So thanks for watching, everybody. Thank you for watching this week. A lot of good comments from everybody, from Bill, from Oliver, from Lacey, a lot of people this week. So thank you all for the questions. I hope you enjoyed everything. Tune in every morning, 7:15 a.m. on the West Coast and 10:15 a.m. on the East Coast. We go live every morning trading options. Also tell your friends who are trading options to tune in as well. We can all trade options together. Thanks so much. Enjoy the weekend.